Wall Street closed slightly up this afternoon after another roller coaster day of trading. It comes as both Canada and the European Union announced retaliatory tariffs against the United States. The EU levied taxes on American beef, bourbon, motorcycles, and jeans, among other products. Canada placed a 25% tariff on more than $20 billion worth of American exports. Both were direct responses to President Donald Trump's universal 25% tariff on steel and aluminum.
We have been abused really for a long time, and we will be abused no longer.
We will always remain open to negotiations. It is not in our common interest to burden our economies with such tariffs.
At the same time, U.S. consumer prices are up 2.8% from 1 year ago. A dozen eggs now cost nearly 60% more than this time last year and are more than 10% higher than last month.
All right, so how's your 401k? You might be afraid to look, but don't panic just yet. We have some tips to hopefully help calm your nerves in this roller coaster of Wall Street right now. And joining us is Keith Berenguer from Ameriprise Financial Services with 3 things that we can keep in mind. It has been a little volatile out there. The Dow still was down a little bit today.
Yep.
S&P, NASDAQ up just a little bit. So you're saying the first thing that people should keep in mind is diversification.
Diversification is very important, Janet. It's important to make sure you keep your long-term goals in mind and you stick to your financial plan. One of those things that is very important is to make sure you're allocated properly across stocks, fixed income, and cash, making sure you're not too concentrated in any one sector in the stock market. So you don't want to have too much in technology or too much in financials. You want to make sure it's spread out. And for those people that are really concerned, defensive sectors like healthcare and consumer staples are a fairly safe haven way to protect some of those equity assets.
All right, so the second thing you say is cash on hand. That's not always easy, but it's important to try to have some cash.
It's important to have that so you don't have to dip into your 401k or IRA, so you have some emergency funds there waiting for you in case you need them in a time of need. Yes.
And then with all this going on, people, I mean, they're looking at their portfolio and then they freak out when they see it going down.
Yes.
And then they make a decision that they may regret later.
So emotional decisions in times of volatility typically aren't usually the best way to go. What you want to do is make sure you craft a long-term plan, make sure you stick to that, and make sure you're allocated correctly. For those that are close to retirement or in retirement, it's really important to make sure that you're not over allocated or have too much of a concentration in any one area.
Yeah, that's what I was thinking. If you're close to retirement, you might want to shift to something more conservative.
You might want to be a little bit more conservative, have a little more cash on hand, and like I said, make sure that you're in potentially those areas that are less affected by volatility, like healthcare and consumer staples.
And as we watch what's going on, just try to be calm, because generally we can get past this.
Absolutely. These corrections happen from time to time, usually every 15 months on average. Check with your financial professional if you don't have one. Make sure you stick with your plan, and these times will go by and they will pass.
All right, and still have faith in the stock market.
Absolutely.
Okay.
Absolutely.
All right. Thank you so much, Keith Berenguer from Ameriprise
Yes.
Financial. We appreciate it. Okay.